Hello everyone and welcome to today's webinar. Today we're going to be jumping in and dissecting how to get money and credit for a brand new startup business. So if you're new to business, if you're thinking about starting a business, we're going to dive in. I'm going to dissect this process and teach you about a lot of financing that's actually available for brand new startup businesses, even introduce you to a few actionable steps you could take to start building your business credit, which is a really easy, fast way to start getting money for your business even outside of financing that's available. So before we jump in, I always like to introduce myself. If you haven't been on one of my webinars before, my name is Ty Crandall. I'm actually the Director of Business Services here at Credit Suite. My job is very simple. I help people offer business credit and financing to their customers, and in doing so, my group literally helps tens of thousands of customers across the country establish business credit and also obtain financing. So what I'm about to teach you is not conceptually might work. This is actual actionable things that you can do to get money based on what we see works in the current lending environment. Now, I will not be having any kind of pitch today. If you're interested in learning more about our products and services or what we can do to help you and your customers, feel free to check us out. We've got a really cool site or really cool website that will actually give you information. You can go to our main website, creditsuite.com/business credit. I have this little alert that keeps popping up that I apparently cannot get closed. So apparently it will stay open the entire time. So you can go to creditsuite.com/business credit and you can get all the information you want to get about us there. I will not be going over any kind of pitch or anything today. It's just going to be an hour's worth of straight information on how to get money and credit for a startup business. That being said, let me go ahead and jump in. Let's get started. Okay, so money and credit is available. So there are a lot of forms of business financing available today for small business owners. Okay, but there's a massive abundance of business credit that's also available. So you'll hear me in this webinar describe these two things as two different things. I like to do that. I like to simplify it by saying business financing are loans and credit lines and, actual money that you would get from a bank or a private investor. Whereas business credit is like credit cards. It's a Staples credit card or a Visa credit card or a MasterCard. So the first thing that you really want to know is that both are viable forms of getting money for your business. There's a lot of loans and credit lines out there that can get you money that you're about to learn about. There's also business credit where you could build a credit profile and score for your business and obtain all kinds of credit for your business that way. And this money just isn't available at most conventional banks. What you're about to see today is a lot of alternative lending sources that conventional banks just do not offer. This is not something you're going to walk in your bank and find. The same with business credit. Banks don't do anything or take any steps to help you build business credit. So everything you're going to learn about today is absolutely available. It's just not something you're going to find readily available at a big bank. But let's talk about bank funding, because most business owners go to their bank when they need money. And this is really one of the common questions I ask our clients is, hey, if you need money tomorrow, where are you going to go? And almost everybody, 9.9 out of 10 people respond quickly and say, well, my bank. And the next question is, well, what would you do if your bank won't lend you money? And then typically the person has no idea what they would do next. So most business owners go to their bank when they're in need of money. But banks mostly deal with SBA loans, which require 2 years in tax returns to qualify. So the major lending product that banks offer to small businesses are SBA loans, and for a very good reason, because SBA insures the bank against a loss for upwards of 90% of the amount lent. So let me give you an example. Let's say you go to your bank and they give you a $100,000 loan. Well, what SBA says is, look, if this person defaults, we'll give you $90,000 of the $100,000. Well, as you can imagine, the risk isn't too high in that kind of transaction. So as a result, that's the major product that banks lend to small businesses, are SBA loans. But SBA loans require 2 years of tax returns to even qualify. So they immediately will not work for a new startup business, because a startup business won't have tax returns. They won't have 2 years of tax returns. So a business typically has to be open for 2 or 3 years for a bank to even consider them for actual business financing. Now, here's the great news. SBA loans only account for less than 2% of all business funding in the USA. I think I got that from the Department of Revenue, one of the best statistics I've saw related to this. See, most business owners go to their bank when they need money, but banks are not even close to the major source of business financing that's out there. There's a lot of money out there, but people just don't know about it because they're so used to going to their bank, and bank loans, these SBA loans, only account for less than 2% of all financing that takes place in the country. So the bottom line is the money is out there, it's just not available at the big banks. So due to these tax return requirements that we jump back to, no business can even apply unless they've been in business for 2 or 3 years, because that's what SBA and the big banks require is tax returns. Plus, to get approved, everything on the personal and business side must be perfect. In our world, this is why most people don't qualify. I have seen a client denied for an SBA loan because of a 6-year-old late payment on a Bank of America collection, and his score was 780. SBA doesn't mess around. Everything has to be nearly perfect to get approved. And most people we see on a daily basis aren't perfect. They don't have perfect credit. They don't have perfect business credit, tax returns, P&L statements, financials, bank statements that are positive every single month after month. There's some kind of negative. And if you have some kind of negative, unfortunately, these kind of conventional SBA loans just won't work. So some banks might give you a credit card. You might be able to go to them and say, I'm a brand new started business, and if you have really good credit, they might give you a credit card. But from what we've seen and experienced, that credit limit is only a fifth of what you could get through the right sources. So you're about to learn of ways you can get 5 times what your bank would give you in regards to a credit card. And if you take that out of the mix, well, then mostly all they have is SBA. And the easiest thing I say about SBA is this. How many people do you really know that have ever told you they've successfully obtained an SBA loan? And if I ask that to an average person, they usually can't think of anybody or no more than 1 or possibly, on a very rare occasion, 2 people that have ever done this. They're very rare, which is why you rarely ever have heard, if you've ever heard of anybody actually securing that kind of financing. Look, big banks are not the best source of money for businesses. Don't get me wrong. They're good at a lot of different things. But when it comes to lending to business owners, quite honestly, banks really want nothing to do with it. But they have to provide that service because so many of their clients are business owners. Now, it might seem crazy to say the banks don't want much to do with business lending, but it's not. Look, statistically, 90% of businesses fail within the first 10 years. And you could go all the way down to, say, 74%, fail in 5 years and all the way down, but it's risky business. It's risky space, which is why conventional banks aren't the best fit. They don't deal with very low risk lending, not anything even close to the risk that is associated with business financing. So most business owners only know to go to their bank when they need money, and the result is most of them get denied. They go to their bank, and in a lot of cases, their bank will say, don't even apply, you don't even have what we're looking for. Of the applications the bank actually accepts, statistically 89% of those applications are denied. So even when a bank says, that's fine, give me your tax returns, your P&Ls, your personal credit, your business credit, and your projected financials, your current financials, the resume from everybody, even when they get all this information from you, almost 90% of applications at big banks are denied. There's just no statistic that supports that big banks are any kind of answer for small business. So as a result of this, what happens is people believe there's no solution. Okay, they think there are no way they can get money because their bank says no. And that's one of the reasons that today I'll have the biggest attendance of most webinars I do. This topic pulls a lot of interest because most people have this defeating attitude that they can't get money because their bank says no. Hey, some people don't even try to apply because they know their bank says no. But the reality is, and what I hope that you're starting to see the picture that's being painted, is that don't give up. Big banks just aren't the place to go to get money. There's plenty of awesome ways to get money out there for a small business, even if you are just starting, but you can't rely on your big bank. Statistically, they're just not going to give you the answer that you're looking for. So let's talk about one of those answers. One of those answers that works for a brand new startup business, if you're just thinking about starting a business or opening a business, this is a great solution for you that you're not going to find at big conventional banks. And it's called collateral-based financing. So this is financing that you could use collateral as collateral to offset the risk that the lender has for lending you the money, and as a result qualify for immediate financing. So for example, one form of collateral-based financing is called account receivable financing. So let's say you're a newer business and you're doing business with the government or another business, and they pay you months after you actually do the service. Perfect example is a doctor's office. Okay, a doctor's office collects payments from customers as a copay, then they have to go to the insurance company, Medicare, and Medicaid to get the rest of their money. And they might wait weeks or months to get paid. Well, if you're in that kind of situation, then the account receivables you have can work as collateral for immediate financing. You don't need to wait to get the money. You can get 80% of that outstanding money advanced to you within 24 hours. And what's crazy about this kind of funding program is you can get rates less than 2% even if you have 400 credit scores. Phenomenal rates even if you have bad credit. Now you might say, hey Ty, look, I don't have account receivables. That's fine. We're going to talk about a lot of options that will work for you even if you're not somebody that has account receivables. But again, some people will, which is why I want to walk through some of these programs even if you do or don't have some of these things. Now another great financing option is securities-based financing. This is where they look at stocks or bonds that you have, and they will get you a loan or line of credit using those as collateral. Now again, even with challenge credit, you can get ridiculously low rates of 3, 4, 5% on this kind of financing. So all you have to do is use your stocks or bonds as collateral. You can keep the stocks. You can still earn interest on the stocks. Nothing there changes. You could just get an advance against those. And of course, if you ever default, they just take the stocks. So the risk isn't so great to them. And as a result, you can get immediate financing to help build a business. Now, this could be beneficial because let's say, for example, that you have somebody that wants to financially invest in your company. Well, they can do it without even giving up any money. They could just use their stocks as collateral, get you a line of credit against that, and then they wouldn't even have to put any cash money into the transaction. They could still keep their stocks and continue to earn interest. There's a lot of situations where this can be beneficial if you or a potential partner has this kind of collateral. And keep that in mind. Even if you don't have this kind of collateral, giving you this kind of financing option makes it easier to find an investor who might be willing to invest in your company because they don't even have to take money out of their investments to do so. Now, a similar option is 401k financing, very popular for partners that are investing in a business. So sometimes 2 or 3 people will want to jump into business together, and they'll use their 401ks as stock or as collateral to actually get financing for the business. You can get a loan of 5 years using the 401k as collateral, and rates are less than 5%. Again, even if you have challenge credit, you can have 500-600 credit scores and still get up to 100% borrowed against what's in a 401k with rates less than 5%. That's ridiculous. None of these options with SBA, if you have any kind of challenge credit, you can't even get approved. But with these 3 options, for example, you can get rates of 2, 3, 4, 5%, even if you have severe credit challenges and even if you're a brand new startup business. Now, another form of collateral-based financing is inventory financing. A lot of people just getting invested or getting started in certain businesses have to purchase inventory to stock their shelves to sell to their potential customers. Well, that might wipe out all of the cash flow they have. Well, if you're one of the people in this situation, you'll be happy to know you could use your actual inventory as collateral for financing. And you can get a line of credit or loan for up to 50% of the value of that inventory. So if you have inventory of $300,000, then you could get a line of credit or loan of $150,000 at 4 or 5% interest. Again, even if you have credit challenges. Equipment sale leaseback. So this can go a couple different ways. One way I'll introduce to you later. But for this example, let's say you have a big piece of equipment. Let's say somebody's donated a big piece of equipment for you. Let's say you had to buy the equipment to get your business started, and now you're strapped for cash. Well, you could use that equipment as collateral, borrow against it, and get an equipment sale leaseback financing. Now, this literally is exactly as it's laid out. Basically, you sell the equipment to the lender. They lease back the equipment to you. And what's awesome about this is you could get access to this money with like 1 or 2 months worth of payments. Simple as that. So if your equipment's worth $100,000, then you might be able to get up to 50% of that, maybe $50,000 advanced to you, and all you have to pay is just the first 2 payments, and you're off to the races. Okay, and rates are fairly low. Again, this works for all different types of credit, but the rates will vary widely based on the credit credit quality. So somebody that has better credit, 680 type scores, is probably going to get a 5-10% rate. Somebody that has 600, 500 type scores can still get approved, but the rate's going to be significantly higher. Now, commercial real estate, if you do own commercial real estate or, again, have a potential investor that does, then you can get up to 65% cash out refinance with rates of about 5% using that real estate as collateral. So you could take the real estate, borrow against it, get a cash out loan, and use that financing to do whatever it is you're looking to do. So, again, some people get started by buying their real estate first, and then they're stuck because they have a lack of cash flow. But with this kind of financing, you could use that as collateral and qualify even if you don't have a lot of liquid money. Book of business financing doesn't even apply to you unless you're an insurance agent. But if you're an insurance agent, this is going to be the best webinar you ever attended, because most insurance agents we speak with have no idea that they could use their existing book of business of clients as collateral for financing, which you absolutely can. You can get up to 120% of the surrender value of that book of business. That's the value of the book that you would sell it back to Allstate, for example, if you got out of the business. And this is one of the best loans you're going to get outside of SBA, period. 3 to 10 year loan at 5% rates or lower. Okay, and in every single case that we've ever done, and we do a lot of this kind of financing, the actual client has elected to get less money than they were approved for. They could have got way more money than they even chose to take. So this is a great option to get a considerable amount of money, okay, even to buy an insurance practice using the existing book of business of that insurance practice to do so at really, really, really good terms with low rates and long loan terms. Sign wrap financing, not something you're probably going to use as collateral to get money, but it's good for you to know that you can get financing even as a startup business to put up a commercial sign or to put up a vehicle wrap on your vehicle. Now, I didn't know this. Many years ago, I owned a mortgage company, never even put a sign up in front of the building because it was so much money to do so. Signs can often run $5,000 to $50,000. And if you're starting a business, most people aren't going to invest $20,000 in their sign. Okay, it's not going to get you enough return to make that make sense. But you'll be happy to know that as a startup business, you can get financing to purchase your commercial sign up to $50,000, and all kinds of signs are accepted. You can also get financing to put a graphic wrap on your vehicle. Now, you've definitely seen these before. Cars that are driving down the road with graphics, decals, and writing on them. Some of the new ones even have LED lights that are awesome. They light up at night, all different kinds of designs. It's absolutely phenomenal. A great marketing method. If you look into the actual statistics of this kind of advertising, it's very successful. But again, as a startup business, are you going to whip out $5,000 to wrap your vehicle? Probably not. So you'll be happy to know that even as a brand new startup, you can get wrap financing. You can get the financing you need to wrap the vehicle. Then you're paying payments on it as it's generating sales and business for you, which is just absolutely phenomenally awesome. Okay, you can also get equipment financing as a brand new startup business. So you could get 50, 95, even 100% financing to buy the piece of equipment you need to start operating in the business. See, we find some people are so obsessed with looking for money that they forget to focus on what it is they're looking for money for. And if you're looking for money to buy equipment, well, don't look for money to buy the equipment. Get financing specifically to buy the equipment. Get equipment financing. Okay, again, 5% rate plus depending on risk, and you can get going in some cases, depending on credit, with as little as 2 months payments to get going. So you could buy the $5, $10, $20, $30, $40, $50,000 piece of equipment that you actually need through equipment financing without having to get money through another source. Now, maybe you're in residential real estate. If you are, rehab financing is awesome. You can get 100% of the money you need to buy a home and rehab it or fix it up to flip it. Okay, the loan to value after it's all fixed just can't exceed 65%. Now, it might sound like I just said two things, so let me clarify. A lot of people that are flipping properties buy them cheap, right? So maybe you got the property worth $100,000 and you're buying it for 50. Well, you could get 65,000, the 50 to buy the house, 15 more to fix it up, as long as after it's sold, it's worth $100,000. So a lot of car clients will come in, get the money they need to buy the property, to flip the property, and then in 6 months they sell it, pay off the loan, and they're good to go. To qualify for that kind of financing, all you really need is some kind of recent history of actually flipping properties, they will want to see you have some kind of liquid money in the bank. They might even have you put part of it into an actual escrow account. How much money they want to see depends on how much money the house that you're buying. And they want to see you have average credit, 630, 650 type credit scores, you can get approved. This is phenomenal because most people in real estate already know right now banks are not lending money to people in real estate. But with rehab financing, you can get 8% plus interest rates and get the financing you need with fairly simple qualification requirements. Unsecured credit cards. Okay. This right here, one of by far the most popular funding programs that we actually offer. Unsecured credit cards use personal credit to actually qualify for the financing. Okay, so if you don't have good credit, don't worry. There is a potential if you have credit partners to use those credit partners to actually help you. Now, the reason I keep bringing that up is a lot of people say, look, I have a vision, I have a dream, I want to own a business, I'm low on money. And they might have a friend, family member, somebody else says, I believe in your vision and dream and I want to buy in, I want in on this, and I have good credit or this collateral or this or that. So keep in mind, even if this isn't applicable for you, it opens up, because you might not have good credit, it opens up a lot of doors because there's a lot of potential investors that do have good credit that would like to see this kind of option where they could keep their money in their bank but still help you accomplish what you're trying to accomplish with building the business. So approval limits are from $10,000 to $150,000 with this kind of credit. Okay, no consumer credit reporting. So ultimately you're getting credit, and I'll kind of give you details as we go, but none of this money you're getting reports to the consumer credit reporting agencies. It reports to the business credit reporting agencies. So you're about to see in a few minutes how beneficial this actually is, because you're actually able to build your business credit on top of actually getting the money you're looking for. You will need a good credit partner or having excellent personal credit yourself with no derogatory items. You need to have a little inquiries, less than 2 or less in the 6 months, and you have to have your accounts utilized under 30%, which means like if you have $1,000 credit limit, like you can't owe more than $300 or you won't get approved for that kind of financing. Okay, approval limits are equivalent to your current limits. So if your current highest credit card limit's $5,000, you're probably going to get approved for $5,000. But with this kind of financing, you'll get 5 times the amount that your bank would issue you. We did this as an experiment. Okay, we had a client with 800 credit scores. We walked him into his bank and we tried to actually help him apply for the actual credit himself. Okay, he was able to secure with our help $12,500 is what he was actually able to secure. Now, with that being said, our lender was able to get him $75,000, okay? So big difference. A lender in this space could usually get you 5 times the amount. Excuse me, I got a little lost in my slideshow here. Give you 5 times the amount of what you're normally going to get at an actual bank, because what they do is they know all the sources. So they'll know to go to Bank of America, Chase, and they get the best cards that don't report on the consumer credit, only report on the business credit, that have all kinds of specials like 0% intro rates for 6 to 18 months. Now, the lender will charge a fee for this. Every lender I've seen in this space charges about 10 or 12%. We've got a lender that's the lowest I've seen that charges 9%. But it's well worth it because, again, you're getting 5 times the amount of money that you would normally get, and this is not something you could ever do on your own. Because the problem is if you go to apply for a Bank of America credit card today, you might get approved if you have excellent credit. But then if you went to Chase and applied, you get denied because Chase would see Bank of America's inquiry. This is a delicate dance and a phenomenal program because the lender knows the sources to apply in the right order to go in and get you 3, 4, 5 times the amount of money that you'd ever get on your own just trying to go to your own bank. And again, reports to the business credit reporting agencies helping you build your business credit. These kind of accounts initially will require a personal guarantor, although I'm about to show you how you can get around that. Now, there is another option that are personal unsecured credit cards. And these are a little different because they report to the personal credit reporting agencies. Now, again, you can get approved for 5 times the amount of money, just as I just walked you through. Rates are pretty much the same, 0% for 6 to 18 months. Okay, the lender usually charges more for these kind of accounts, about a 12% fee for these kind of accounts versus the other kind of accounts I've shown you. Here's the biggest difference. The only real difference between what I showed you just now earlier with business credit reporting and these is that these report to the personal credit reporting agencies, not the business credit reporting agencies. So that means it doesn't help you build business credit, okay? And if you use these cards and you overutilize the accounts or using a greater utilization than you should of that actual limit, then you can actually lower your personal scores. So these aren't as great as business credit accounts because they don't help you build the business credit, and using them can affect your personal credit, but another great source to get approved. So why do I talk about them? Well, the qualifications are much easier than what I just showed you. You know, with the other ones, you need about a 720 credit score to get approved. With these, 680 or higher, you can get approved for financing. Okay, your utilization can go all the way up to 60%. So if you owe 40, 50, 55% of your high credit limit, you can still get approved, where you couldn't do that with the business credit reporting accounts. And they'll let you go to 5 inquiries less than 2. So significantly more easy to qualify for these type of accounts than what you're actually going to find on the ones that report to the business credit reporting agencies. And these, again, require a personal guarantee initially. So we just walked through a ton of different financing options that work for you. Usually the main two types are collateral-based financing and credit-based financing. If you are in business 6 months or longer, it opens up even more doors in regards to cash flow based financing, which I didn't even introduce here, and I should have, because even if you're in business 6 months, you have $10,000 a month going to your bank account, you can qualify for cash flow based financing also, on top of the collateral based and the credit based financing I just showed you. So now let me walk you through the actionable steps to build business credit. I'm going to talk to you a little bit about what business credit is, and I'm going to map out as briefly as I can the actual process where you can get in there and start getting this credit, because this is one of the fastest and easiest ways to get money for a business, even if you have bad credit and have no collateral or cash flow. So when am I talking about business credit? I'm talking about credit that's obtained in a business name that's linked to the EIN, not the actual owner's social security number. So this is credit that the business builds itself to qualify for more credit. So let me give you a real simple example. If you go and fill out a normal application for a Lowe's credit card, you probably fill in your social security number, you fill in your revenue, your household income, everything else. With business credit accounts, you would leave your social security number off the application, leave your household income off, and let the EIN itself stand on its own. They would pull the credit file that's linked to your EIN. A lot of people don't even know that they have a credit file linked to their EIN, but you absolutely do. And then that credit profile itself can then be used to qualify for credit. Now, the credit is in the business name. It's based on the business ability to pay, not the business owners. So you don't have to supply a personal credit check. Matter of fact, you don't even have to put your social security number on the application when you do it the right way, because, again, your credit that's linked to your EIN stands on its own. Now, you might say, Ty, well, how do I get credit linked to my EIN? I'm going to show you in just a second. I'll walk you through the actionable steps to be able to actually do this, okay? But the great thing about this is a lot of our clients have credit problems. Well, with this, you can start getting money immediately, and it completely ignores personal credit. When you do it right, you're not even putting your personal social security number on the app. You're not even giving them the authority to pull your personal credit to actually approve you. So there's a lot of benefits, as you can imagine. First of all, you're building a business credit profile that's completely separate from your personal. So now you've got a business credit profile and a personal, which gives you double the borrowing ability, right? Because you could have like a Staples credit card on your personal credit report. Now you can have a Staples credit card on your business credit report. So there's a lot of different benefits that this provides, business credit, but the main benefits are that you can get it regardless of your personal credit. You can get it with no personal guarantee. It's significantly faster and easier to build than consumer credit, amongst a lot of other benefits that you will soon see. So there's 3 types of business credit accounts you're going to want to know about. A vendor credit account is a starter credit account for a brand new business. Okay, this is an account that almost anybody can qualify for, even if you just opened your business yesterday, okay, to actually start building your business credit. Almost any business can be approved, okay? There's no requirements for a lot of vendor sources. The main requirements are that you have a bank account and that you have, well, some of them don't even require that. The main 2 requirements almost all of them have is you have to have your number listed in 411, your phone number. You need an EIN. If you have those 2 things, you can qualify for a lot of vendor accounts that are out there now. You do not need to buy a shelf corporation. I get this question all the time. Ty, should I buy a shelf corp? No, you shouldn't. They're a ripoff. There's no reason to buy a shelf corporation. I'm about to show you exactly how you could build a business credit profile to start using it to get money without paying $2,000, $3,000 for a shelf corporation. Look, shelf corporations many years ago used to maybe be a decent idea when it took weeks or months to establish a corporation. Now, within minutes, you can establish a corporation online, and following a proven system, you could build credit and get money for your business without buying an aged corporation. As a matter of fact, most credit issuers and banks are very keen to shelf corporations and are adamantly opposed. The FTC calls it borderline fraud. Nobody wants to do with shelf corporations, and they know it's a shelf corporation because they say, when did your corporation open? And you say 3 years ago. They say, give me your bank account. Why did you just open your bank account yesterday? And you go, they know what to look for. So they know it's a shelf corp. It's a ripoff. You don't need to buy them with what I'm about to show you. So Lachlan & Associates, Quill, Reliable Office Supplies, Uline, these are the type of vendors that will approve you for brand new credit. And if you don't have time to write this down, don't worry. Okay, first of all, because you attended this webinar, we will send you a playback of the webinar tomorrow. Okay, and secondly, I will go through some of these sources individually here in just a few minutes so you can become more familiar with them. So store credit. Once you have vendor accounts established, 5 of them, you move into the second type of business credit, which is store credit. Now, in order to get this, you need 5 payment experiences. So let me explain what that is. If you have a credit account, and it reports to Dun & Bradstreet and Experian, that is 2 payment experiences. So one account can qualify for 2 or 3 payment experiences depending on how many bureaus it reports to. You just need a total of 5 accounts reported across all 3 bureaus. So I'm about to introduce you to some sources that will report to 2 or 3 different reporting agencies, and that can qualify as 2 or 3 payment experiences depending on how many reporting agencies they report to. Most major retailers offer store credit. Staples, Office Depot, Lowe's, Home Depot, Walmart, Target, Sam's Club, Amazon.com, Best Buy, Apple, Dell, BP, Chevron. I mean, you name a major retailer, and Costco, they almost all offer these kind of business credit accounts that we're talking about here, that with even 5 payment experiences, you can start getting approved for with no personal guarantee and personal credit check. Now, how can that help you as a brand new start of business? It's pretty obvious, right? Think about this. This is the kind of credit you can get in 3 months. Building business credit the right way, 90 days, you can get it. So now all of a sudden you get this started today. Within 90 days, you're buying your paper at Staples using your business credit. You're walking into Walmart to buy your supplies with your business credit account. You're going to Amazon.com with your business credit account. None of these required your personal credit check to get, using your business credit to lead the way. And I'm about to show you how to do this. Cash credit, third type of business credit. Once you have 10 payment experiences using the vendor accounts, using revolving store credit, then you can start getting cash credit. You probably heard this term before. What does it mean? Well, it means Visa cards, MasterCards, Discover, American Express cards. With $5,000, $10,000, $20,000 limits you could use anywhere, a lot of this credit's available with no personal guarantee. Now again, it usually takes about 4 to 6 months to build to this level of business credit building. So usually you can get your initial vendor accounts immediately. Okay, it takes about 60 days or 90 days for those to report. Once those are reported, you start getting store credit that I just introduced you to. You get a little bit of store credit, get 10 payment experiences total. Then in about 4 to 6 months, you are to a point where you're getting $5,000, $10,000 credit limit credit cards, cash credit, Visa, MasterCard, Discover, cards you can use anywhere for any single purpose that you choose to use it. So obviously a lot of benefits here from what I just went through. First of all, approval limits on these kind of accounts are significantly higher than personal accounts. SBA, great resource for this. 10 to 100 times higher limits on these accounts than you would on the personal side. So let's say you say, well, Ty, I have a $2,000 Staples card. Congratulations. You'll probably get a $3,000 business credit Staples card. So not only can you get double the money, but it's even more than double the money because now with business credit accounts, you're getting 10 to 100 times higher limits than you'd see on the personal side. Plus, most business credit can be obtained without the business owner bringing on a personal liability or personal guarantee. This means if you ever do default, they can't come after your personal assets. It is completely irresponsible to use your personal credit cards to build your business if you know of another way to do it. Because even though you don't think of failing, 90% of businesses do. So to have that kind of risk and go in and take your family security and finances and put them on the line makes no sense if there's an alternative. And business credit is the alternative. With business credit, you don't need the guarantee and you can have access to all the money, which helps protect your own personal finances. Okay, a business starts building a credit profile really much the same as you would start building a personal credit profile. You start with no credit profile at all. Okay, you get approved for these vendor accounts that I told you about that report to the reporting agencies. Okay, the business uses the credit and pays the bills. Okay, so now you got some vendor accounts. You go buy some stuff with those accounts. You pay your bills on time. You then have a credit profile, score, and trade lines established. And as you continue to do this, you'll qualify for more and more and more credit. Really, there's nothing I just outlined here that's any different than how you build consumer credit, except with consumer credit, you don't usually start with vendor accounts. You usually start with like secured accounts where you don't have to do that in the business world. You can start getting real usable credit from vendors immediately and really follow the exact same steps as you would for consumer credit building. So let's talk about the actual steps. Well, the first thing you want to do to get approved for business credit is you have to actually make sure your business is set up credibly. Look, the perceptions lender have of you is everything. Okay, so again, when you pull consumer credit, then they're looking at your credit report to make the decision. With business credit, they look at two things. They're looking at the business credit report they're pulling and your application. They're looking at all kinds of things on your application to determine how solid of a candidate that you are. So you've got to make sure your business is set up credibly to meet these lending standards or you're just not going to have a chance of getting approved. So for example, your business name needs to be your exact legal business name. Okay, your full name, including your DBA, is what you should be putting on the actual application. I get this question a lot. Ty, I have a DBA. How do I fill out the application? You put your corporate name or your company's name with any DBAs included. And you have to ensure that your business name is exactly the same on everything you have. Look, there is a difference between ABC Company and ABC Incorporated or ABC Company Incorporated. These are all different. You need to make sure that your exact legal name is on your corporation papers, your bank statement, your utility statements, your everything, your licenses, everything needs to be exactly the same and congruent with how you're filling out that actual application. Okay, you need to make sure that you get your company set up. I said your corporation doesn't have to be a corporation. Okay, but you need to set up your entity and get your EIN number. Okay, and get your phone listed with 411. Your EIN number is how the IRS in this country identifies your business. You also need to make sure that your phone number is listed with 411. These are the two things that almost all vendors require. So if you only have these two things, you're probably still going to be able to get approved for business credit, but you must have your EIN set up. You must have your phone number listed with 411 to start getting initial credit. These are two essential things to get approved for initial business credit. So your business address needs to be a real brick and mortar building. Deliverable physical address, can't be a home address, can't be P.O. box, can't be UPS. Through our finance suite, we actually have the same technological checks that lenders use. And we can tell immediately if you're entering a cell phone or a real phone, a landline or a home phone, a business address or a home address. Lenders do this automatically. They run the address through with their technology, and their technology tells them if it's an actual business address or home address. So you cannot use these other solutions. Okay, you can use like a virtual address. For example, like a company like Regis you can use, but you cannot use a UPS or P.O. box when applying for credit, or you're not going to be successful. Now, you should have a toll-free phone number and a fax number, unless you're like a pizza delivery company, right? Like if you're a pizza delivery company, you don't need a toll-free number. It's like not needed at all. Okay, but if you're not a pizza delivery company, for example, then you should have an actual toll-free number for your business, and you should also have a fax number. And you need a professional email address, not, Ty Beachbum at, yahoo.com. You need to have a professional email address. Like mine is ty@creditsuite.com. And then nowadays you can get a domain at GoDaddy for $7 or $8 with an email address. It's very simple to do. But you don't want to try to complete an application without having a professional email address, a fax number, or a toll-free number if you're a business that deals with customers outside of your local area. And you should have a nice-looking professional website. Again, very easy to do. You can go to monstertemplates.com or go to GoDaddy, and nowadays get a website set up for less than $100 that's definitely presentable. Okay, you need to ensure that you have the proper licensing before you even start applying for business credit or financing, which means the state, the city, the county, you've got to have the proper licensing to be able to actually secure money. And you need to make sure your address is correct on all the licenses, as we talked about just a few minutes ago. So make sure you also take the time to verify that the state, the IRS, your bank, 411, your national directory, everybody has your business listed the same name with your exact legal name. Why do I keep coming back to this? Because this is one of the, believe it or not, crazy as it is, this is one of the number one reasons banks turn down business financing. What they do is they go and pull your business credit and you put in ABC Company instead of ABC Incorporated, and then they can't find ABC Company because it's really ABC Incorporated, and you get denied. Crazy. One of the biggest reasons people get denied at the banks is because they don't put their exact legal name on the application. It's so important. This is why you need to make sure all the stuff is congruent. You also need to make sure that you get a copy of your business credit report. Okay, it's a great idea before you apply because you need to know what's on your credit report. Believe it or not, you can have a lot of stuff reported on your business credit report you might not even know about, good or bad. So you need to know this before you start applying. Okay, trying to get approved with existing bad credit has its own unique additional challenges. Don't get me wrong. Okay, if you go to my YouTube channel, I've got a webinar I did on how to fix damaged business credit. There's a way to get it fixed. But you don't want to go in and start applying for credit and then get denied and not know why, and only to realize that you blew your chances because you were trying to apply with a bad credit profile that you didn't even know you had. So you review your report and dispute derogatory items first before you apply for any kind of initial business credit. So you can use a company called Collateral, which is great to get an idea of what's on your report. Now, I have a link here you can actually go to. We have like an affiliate relationship with them. So I think it's less than like $30 you can get set up. And you get Experian Business and Dun & Bradstreet and TU Personal and Experian Personal. But in a lot of cases, like, they're giving you your scores and an outlook of what's on your report, not your full report. If you want your full report, you can go to Dun & Bradstreet and get your full report, for example, but you'll pay $50, $60 a month for that. So recommend you start with Collateral, because Collateral will give you Experian and Dun & Bradstreet, which are the main ones you need to be concerned with, and they'll do it for less than $30. Now, if you see that you have stuff on D&B and Experian that you need to dig deeper than Collateral, then you might want to pay Experian or D&B for their full reports. But I would start with Collateral first because it gives you a good outlook of your company. You can pull credit for up to 5 other people's companies, your competitors, your friends, whatever, and it gives you a brief synopsis of what you need to know without paying the bureaus all kind of ridiculous money for their credit monitoring services. Okay, and again, if you're using this link, I think it's less than $30 a month, like $29 and change basically. You get a D&B and Experian and TU and Experian Personal, and you'll never find that kind of value with anywhere else. And as I'm about to show you, there's another huge reason you're going to want to use Collateral. Huge. So if you haven't already, write that down. creditsuite.com/business reports. Business reports, and then you can just click a link there. It'll take you right to Collateral. You can get set up using our affiliate relationship where you get the discount. And again, I'm about to show you another reason you're really going to want to use them. And they also have the business FICO. They're the only place that has the business FICO score. Okay, only place anywhere you can get business FICO, brand new, that's rolling out. So another good reason to use them. We love Collateral. Okay, I recommend them because we used all the business credit reporting agencies. We know which ones are best, and we have a lot of success with them, which is why we have our clients use them. So obtain vendor accounts first. Okay, this is exactly the third step. Now that you set up your business credibly, you got your business credit reports to see what's on there, the next thing you want to do is start getting the right credit first. So you need to apply for vendor accounts before you apply for anything else. Okay, you can start, again, as we talked about, a business credit report just like you can consumer credit with some small credit cards. Okay, the business can be approved for these cards that are called vendor accounts to help them build the actual business credit. Okay, so again, in the personal world, maybe somebody co-signs to start your initial credit. I was blessed. That's what happened with me. My mom and dad, when I was in the military, in basic training, I think coming out of tech school, they co-signed and helped me get a truck, and it helped build my credit. Okay, but a lot of people don't have that luxury, and they start with small limit or secured credit cards. None of that is applicable in the business world. In the business world, you're going to start your credit profile using these kind of vendor accounts. So what is a vendor account? Well, it's simple. These are creditors that are going to issue you credit on 30, 60, or 90-day terms. They're not revolving credit like a regular credit card you'd think of. So let's say you go to Uline and you buy shipping supplies. Well, they're not going to let you pay that off over 2 years. They're going to make you pay it off within 30, 60, or 90 days. So you have a set time period to pay it back versus revolving where you could pay it off over time. Okay, and then again with these kind of accounts, net 30 is usually the most common type of account that's out there. So for example, you buy $300 worth of goods today on a net 30 terms, you have to pay the full $300 back to them within 30 days or less. This is what a net 30 account is, and this is what vendor accounts are, is ones that give you these kind of net 30, 60, 90-day type of terms. So you can get products and services for your business needs and defer the payment, and this is what's beautiful about them. So if you look at how you start consumer credit, you start with secured credit card. Well, that kind of sucks because you got to put your own money up to get access to your own money and then pay interest on it. That's like crazy. But this makes perfect sense because you can get vendor accounts set up at companies you're going to buy stuff from anyways or sell stuff you want to buy anyways. So now you can finance the stuff that you're going to buy and in the process build your business credit. And the vendor accounts I'm going to introduce you to are ones you can get immediately. So you open your business, you get vendor credit, now you can start getting access to the stuff you need on credit, even if it's 30, 60, or 90-day terms, while you're building your business credit to move up to actual revolving accounts. And some vendors will approve your company with just the EIN number and you being listed with 411. With just those easy requirements met, you can still build business credit with a lot of different companies. Don't use your social security number when you apply. Always leave your social security number blank off of the actual application. Now, some vendors are going to request it. Okay, some people will tell you on the phone they have to have it, but always submit the application without it. Okay, many people that you're talking to on the phone don't even know you can get approved without it. Okay, we had a client go into Macy's. I think it was Macy's or Nordstrom's. They went into Nordstrom's because we told them they could get business credit at Nordstrom's. They talked to the clerk. The clerk said, that's impossible. Can't be done. Got a manager. The manager goes, I think it can be done. Manager called like their area manager. Area manager said, let me make a call. Area manager called regional manager. Regional manager, oh, I know how to do that. This is how you get business credit. The frontline people you're talking to have no freaking clue what they're talking about. They don't even know what's available. They have no idea that their company will issue credit without a social security number on an application. So if they tell you it can't be done, it's probably because they don't know it can be done. Don't put too much weight in what they say. Always apply without the social security number. Most credit issuers will approve you without your social if your EIN credit is strong enough. If your EIN credit's not good enough, you might be declined and they might ask for the social, so no harm, no foul. But no matter what, any credit representative tells you you can obtain credit with your EIN only. And if you use starter vendor accounts, then sometimes they might like you buy, like Uline. They might say, hey, look, you got to buy 2 things from us first, then we'll give you a vendor credit account. So some might require that you buy some small things from them first. No big deal, but jump through whatever hoops you need to jump through to leave your social off the app to get real business credit that's linked to the EIN. So let's talk about how you actually do this through real starter vendor accounts. These are accounts that you use to initially start your business credit building. You've got to use starter vendor accounts to get started. Starter vendors are ones that will give you initial credit even if you have no credit, no profile, no scores now. A lot of you on this call have no business credit. You have nothing. So you can't go into Staples and get a credit card. They're not going to give it to you. You need to start with vendor accounts and starter vendors that will give you initial credit even though you have none. So places like Staples, for example, will not even give you credit if you walk in with no consumer credit. So let's say you have no consumer credit at all. You're no scores, no profile, no trade lines. You can't go into Staples, Lowe's, Home Depot, Amazon.com, Best Buy, and get credit. All of them will deny you. They will say, look, you got to get some credit accounts first and then we'll approve you. It's the same in the business world. So many people fail building business credit because they try to go into stores to get started. Stores, you can't get started at stores. You can't start consumer or business credit at stores. It doesn't work that way. In the business world, you have to get starter vendors first. Remember, get those 5 payment experiences, then you can start getting approved for revolving store credit. So here are some true starter vendor accounts. Lachlan and Associates. Lachlan and Associates deals with corporate setup and compliance, corporate minutes, and setting up a new corporation, all compliance for your corporation, all different kind of corporate services. They report to Experian, okay, and you only need to be listed with 411 and have your actual EIN number set up to get approved. So this is a true starter vendor account because all you have to do is have an EIN number and a 411 listing and they'll approve you. You buy some stuff from them, they report to the business credit reporting agencies, and you establish a payment experience with Experian. And they report in 30 to 60 days. Now you're going to see with vendor accounts, some have services you might not really want, but they report quick and they have a lot of benefits. And others might have services you want, but you might have to jump through a hoop or two to actually get them. It's okay. Getting access to this much credit with no personal guarantee without the credit check is well worth the sometimes small hoops you need to jump through to get it. So net 30 terms is what they'll actually offer. And again, very easy account to secure with only a 411 listing and EIN. Creditera. Remember I told you I was going to give you another reason you really want to get Creditera? Business and credit monitoring services we talked about. They report to Experian and Dun & Bradstreet. So you establish two payment experiences just by getting access to your credit monitoring for less than $30 a month. And again, you can go to creditsuite.com/business reports, get signed up with them for that less than $30, and they report to Experian and D&B. Now, there's no approval requirements. You just get set up with credit monitoring and they automatically report it, which is awesome. But here's the drawback to Creditera. It takes them 6 months to report your trade line. So unlike Lachlan and Associates that report you immediately, with Creditera, it will take you up to 6 months to actually get reported. And they give you net 30 terms. Quill. They sell office supplies. Who doesn't need office supplies? Like every business could benefit from Quill because you need to buy some kind of office packaging, cleaning supplies, something. They report to D&B, and you have to place an initial order with them, okay, unless you have a D&B score. So if you already have some other vendor accounts and you have a D&B score, you can get Quill, no big deal. If you don't and you're using Quill as an actual starter account, then you've got to order some items first. Okay, you might have to order some items and then apply for their credit account and then they give it to you. Or you might have to buy some more stuff and then get it to them. But it's not like you have to buy $5,000 worth of stuff. You could buy $10 worth of stuff from Quill, apply for credit, they deny you. Put in another order, they deny you. Keep doing this and then eventually they will approve you. Sometimes they'll approve you right away. Okay, they'll usually put you in a 90-day prepayment schedule is what they'll do. So they'll put you in sometimes for 90 days and then 90 days they'll give you the actual credit line. They do a lot of different things, but you can get approved with very little requirements. If they don't approve you immediately, you just might have to put in a few orders before you actually get approved. Gimplers. Work supplies, products, office supply type stuff. They report to D&B. You got to place an initial order over $50 and select the Invoice Me option with them. They will pull your business credit. So if not approved, then prepay for the order and give purchasing and choosing the Invoice Me option again until approved. So again, you might need to buy $50 worth of stuff, apply, they say, sorry bud, won't do it. Okay, do it again. Usually on the second or third time you do this, they say, look, this guy is going to come back to us, he's going to get more and more stuff, he keeps wanting credit, he keeps paying for his orders, so now we're going to give you a $100 credit line, $300 credit line, whatever, doesn't matter, it counts as a trade line and reports to D&B. Great starter source. Reliable office supplies. Again, who doesn't need office supplies? Okay, office supplies, promotional products, and they report to all three. Perfect, right? You only need 5 payment experiences to get to Revolving, and they report to 3, so you got 3 right there. If you got these 3 in Creditera, you'd be set. Okay, place an initial order, then request your order be invoiced or billed to your company. They'll pull your business credit. If not approved, do exactly what we just talked about. Keep applying until you get approved. Sometimes it might take 2 or 3 orders to actually get approved, and they'll give you net 30 terms. Uline, shipping, packaging, industrial supplies, report to D&B. You got to have your DUNS number set up with them, and it's free. You can type online free DUNS number and get it set up pretty easily. They will ask you for 2 references and bank references, and again, the first few orders might need to be prepaid to initially get proof of the net 30 accounts. So there's a company like Lachlan Associates, no big deal, dude. You buy something from us, we're going to give you immediate credit report in 30 days. Then you have some of these other ones like Uline and Gimplers that have stuff you probably want, but might make you buy some things before they'll actually approve you. Once you've done the 5 accounts, then you can move into the next step, which is actually getting revolving credit cards that you could use and pay a little bit over time like you're used to normal credit cards. Most stores will not approve a business owner, as we talked about, unless you have these vendor accounts. Vendor accounts must be established first before you can get approved, and it usually takes only 90 days or less of building those vendor accounts to actually get revolving accounts. Then you move to the glory land, the end goal, which is cash credit. Cash credit, Visa, MasterCard, Amex, Discover, $10,000 limits. You need 10 payment experiences. So you got 5 vendor accounts, you got 5 revolving accounts, you're golden. Dell's notorious for issuing higher limits, so apply with them. Use them as one of the last ones you apply for, so they'll give you the highest credit limit you can get, because limits on cash credit are equal to your highest store credit card limit. So I'm telling you right now, hey, Dell gives high limit accounts. So use Dell for that purpose. Get some vendor accounts, use Dell as your 10th payment experience, and hope they give you $5,000, $10,000 limit, because when you have $5,000, $6,000, $7,000, $10,000 limits, that's the equivalent of cash limit accounts you're going to get. So to get approved for cash limit accounts, you really want 10 payment experiences. You really want to try to apply with a revolving account, store account, that has a $10,000 limit or higher. That's your best chance of getting $10,000 plus cash credit. So that's it. I'm going to wrap it up. You know, I've talked pretty fast because I don't mess around. I'm trying to give you guys a tremendous amount of information in a short period of time. So because I do talk fairly fast, I will make sure that I send you a playback of this webinar so you can stop, pause, write stuff down, do whatever. Again, I'm just very big on packing these webinars full of as much viable information and actionable information as I can get in here. So we did a lot today. We talked about collateral-based financing. We talked about credit-based financing. I even mentioned cash flow-based financing if you've been in business 6 months or more. A lot of good funding sources for a startup. We also talked about the actionable steps you could take from having no business credit to actually getting to cash credit in 4 to 6 months. Something everybody should do, because it's regardless of your personal credit. There's nothing that holds you back from doing that kind of credit. So again, hope you enjoyed this webinar. I'm literally getting ready to jump into another webinar at 3 o'clock, so I don't have time for questions. But if you do have questions, feel free to give us a call, 877-600-2487. Feel free to send me an email, ty@creditsuite.com. That's ty@creditsuite.com. And also, don't forget, if you want more information on us, building business credit with us, we have access to all this financing credit. We can help you with all of this. Feel free to check us out, creditsuite.com/business credit. And do me one more thing. Check out my YouTube channel. That's something I rarely ever ask, but check out my name and just type in business credit in YouTube, or my name in YouTube, and subscribe to my YouTube channel. I'm always putting a lot of good videos with this kind of content up there, and if you subscribe, you get alerted, so that way you always know what's going on in the industries of finance and business credit. So I want to thank everybody very much for taking the time to attend this webinar. If you have any other questions, again, feel free to give us a call or send me an email. Thanks, everybody. Have a great day.